Welcome back. You're tuned into Editors Roundtable. Well, before we move on, the key focus in the next few days and for the next 45 days is going to be earnings. Nimesh, tell us, what do we expect from out there? Couple of companies you're focusing on as well. Run us through the list.
Well, Nigel, at the headline, do not expect any fireworks. That's the broad message from the Q4 earnings. So expect contraction across all the sectors. The revenue growth will be 4-5%, but there will be margin contraction for the first time in 2 years across the board. So the margin expectation is just 0.5% to 1-2% for most of the companies. So that's the kind of margin contraction we're going to see in this quarter. The number to watch in terms of the Nifty EPS for this year and next year. The average Nifty 50 EPS for FY26 is around 1145, 1150-ish for 26, and around 1300 to 1315 for 27. So that's a number to watch out. Will there be further cuts in terms of the full year EPS for next year and year after? So that's something which only this quarter earnings will throw up for. In terms of sectors now, which are the sectors which are expected to report weak numbers? Banks will report weaks because of NIM contraction, because of the rate cut. So that's one big sector to watch out for. There would be some outliers, is what I believe there. Commodity chemicals is something to watch out for. There will be some inventory pressures. Demand is still muted, and there will be a bit of an operating leverage concerns as well. So that's the commodity chemicals sector. Construction material also expect a weak quarter this time around. And across the board, oil and gas, those are all expected to be weak numbers. So that's a broad 4-5 sectors which are expected to be weak. In terms of strong earnings within the financials, watch out for NBFCs. They are likely to report good numbers. And even for MFIs, the feedback is you will see probably the last of the worst quarters as far as the MFIs are concerned. So that's the one sector which can report good. Healthcare will also expect to report good numbers this quarter. So all those hospital names and all should report good. Metals and mining, the expectation is on a weak base, they will report good numbers. So that's a sector to watch. And telecom is another sector to watch because ARPUs have been increased. So watch out for the likes of Bharti and Indus Towers. For Indus Towers, there's going to be a bit of a dividend play as well in Q4. So they may announce a large dividend payout. So that is something to watch out for. So that's broadly from a sector perspective. Citi puts out some interesting stocks where they expect positive and negative surprises in the earnings. In terms of positive surprises, HDFC Bank can surprise positively. Varun Beverages, that stock was up in today's trade. Citi is expecting 13% volume growth. So one will be the good, strong growth numbers for Varun this quarter. Tata Steel, Citi is expecting strong. Voltas and Eicher are the other two names where Citi expects a good Q4. So that's from a positive surprises. In terms of negative surprises, Titan can surprise negatively on lower margins, and there could be cuts as well in the next year estimate. So that's something to track. Within the IT, watch out for Coforge. That's been the best performing in terms of growth, but now expect some decline there in Coforge in Q4. It could be a quarterly thing, but watch out for that. Vedanta weak, ICICI Pru Life expect weak, and M&M there could be a bit of risk on the weak mix for M&M. So these are the few stocks where Citi expects a negative surprise. But at the margin, no fireworks, a flattish quarter, with a margin contraction the first time in 2 years. That's the overall summary.
A lot of the questioning and commentary will be
a key to watch.
Yeah.
Tariffs will come up in conference calls, Mahesh.
I don't know whether they have the answers.
But we were in the break. We were talking about any sector, particularly which, according to you, has got dislocation, where price is as compared to opportunity. And I think maybe you like chemicals as
I think this is a sector which has underperformed, right, for a long period of time, almost like 2 years now, right? And there was inventory build-up which was there, and that was taking time to kind of go down. While in the near term, because of the global disruption, it could still be impact. But I'm looking at more slightly longer term, right? Again, coming out from China. China is still a large part of the global chemical trade, right? Almost like 28% or so. India is around 5% or so. So whether India can take a larger share. I mean, it's been a talk about it for quite some time. But now probably there is more reality to it, right? Because this war between US and China is not going to end immediately. It is a long-drawn kind of an affair. So that probably poses some opportunity for Indian companies, right? Because you'll be more competitive, right, vis-a-vis this thing. So that can be a sector to watch out for. Okay. Even for that matter, even textiles, right? Again, relative competitive position vis-a-vis say Vietnam, this thing, where their tariffs could be much higher once they sit on the negotiating table. So these are opportunities, I think, which can emerge for
play out over a period.
Even in exports.
Okay, it's been a great conversation, Mahesh. Look forward to having you more often with us in the studio. Thank you. Newsroom.
Thank you.
Thank you. Well, we're off for 72 hours, but we'll be tracking all the news, the Trump tariffs. So keep it with CNBC TV 18. We'll join you bright and early on Tuesday morning. Thank you for watching the show.